Hey there, welcome to another AutoTrend system video. In this video, I want to show you how you can use divergence using the AutoTrend system to get into trades faster at better locations, which means you're getting a better price and with a smaller risk. So we're going to look at several examples of using divergence. We're going to look at futures, stocks, both long and short. So by the end of this video, you will have a very good understanding and you'll be ready to trade divergence using the ATS and the tools that are included with the ATS. All right, so let's get started here. I have pulled up a chart of the NASDAQ. This is a 15 minutes chart. This is NASDAQ futures. This is NQ. So we're going to start with this one. We're going to look at an example of how you could enter a trade short before you get a signal by the ATS. Okay, so the official signal by the ATS, you can see it's right here. You can see that the bars change from from blue to red at this location. So our official signal to enter short is here, right here. Okay, I'm going to show you how instead of entering here short to benefit from this move down here, you can enter somewhere around here. So you're getting a much better location for your entry. We're gonna see on how you can do that. And by the way, I am using the histogram version of the AutoTrend system. If you go to indicators, to the indicators library, if you already have access to the AutoTrend system, you will see that there are two versions. There is the AutoTrend system ATS candlesticks version and also the histogram version. For divergence, in order for us to read divergence and be able to take advantage of these faster signals, you need to be using the histogram version. Let me show you the difference here real quick. I have added the candlesticks version to my chart. Basically, what this does is it just colors the candles blue and red. And you also see exactly the same signals here. So it's only a difference of where you're seeing your signals. But for divergence, we need to be using the histogram version of the AutoTrend system, not the ones that is coloring our candles. So I'm just going to go ahead and remove that. So you'll see the difference. Let's say you entered here using the official ATS short signal. Your entry would be somewhere around here. Your stop needs to go just above the prior important swing high, which is right here. You see price went down, up, and then down again, leaving behind this swing high here. So our stop needs to go just above this high here. And our target for this trade would need to be a dynamic profit level. So if I go ahead and enable that, you can see that the dynamic profit levels are plotted on the chart. These lines are plotted automatically, so the system automatically finds those as strong support and resistance levels. And you can see price perfectly bounced off of that a couple of times before going higher. So our risk reward on this trade would need to be something like 2.5. You can see here the risk reward is something like 2.5. So we're risking, let's say, 100 to make $250. So that's the official risk reward if we're using the ATS buy and sell signals. In other words, when the color changes from blue to red, we're going short, and that's our signal and that's our trade, and that's perfectly fine to do, and that's how the system basically works. It's still a very profitable strategy if you're using it correctly, but you can also enter sooner than that. So if you can enter right here with a stop loss just above the highs, targeting at the same location, then suddenly your risk reward becomes something like 4.8. So you're risking $100 to make 480. Instead of making 250. So immediately you're having a much better risk reward location. Your entry location is much better because you're entering closer to the highs, leaving more room for profit. So let's have a look on how you can do that using divergence. I'm just going to go ahead and remove the dynamic profit levels from our chart. We don't need it right now, so we can focus on what is divergence. So let's have a look. You can see that the AutoTrend system, the histogram version of the AutoTrend system, it not only changes its color from blue to red and so on, but also it plots a certain height of the bars. So you can see as price is going higher here, you can see price is going higher here. Let me change the color so you can see it. I'll change it to black, make it really bold. So as this is going higher, this is also going higher. So in other words, momentum, this is measuring momentum. What is the power behind this move? If we're seeing that price is going higher and momentum is also going higher, so the ATS is also rising, that means we have strong momentum with this move. And we can see it also here. We have another high, it's creating another high, and the ATS is rising as well. It's rising with it. So the strong momentum continues. And you can see it even in previous swing highs here. You can see this is creating a new swing high here, right here, and we have another swing high at the ATS here and here. You can see that this price is higher, this price is lower than this price, and the same here. So price is moving higher with good momentum. But when that changes, when there is divergence, in other words, when price is moving higher, making a higher high, this high is higher than this high. Let's just highlight it. When this high is higher than this high, but we're not getting the same behavior in the momentum area of our chart on the edge of the AutoTrend system, that signals to me that momentum behind this move is losing steam. It's slowing down. We're making higher highs on price, but lower lows on the AutoTrend system. The strength of this trend is diminishing. And what can we do when that happens? Basically, when we're getting this behavior, it's quite rare to get this behavior, by the way. You can use other types of indicators that measure momentum, like the MACD, like the RSI, and you will find a lot of these types of divergences, but they're much less reliable because they're much more frequent on your chart. And you can take you can just enter an indicator like that on your chart and you will see these all over the place. But with the AutoTrend system, it's much more rare to see them on your chart. When they happen for a very good reason. It's because the momentum is really going down, not just by a little bit, but by a lot. The AutoTrend system will be slower to change its signals, but when it does, it has a lot more conviction. So you can take these divergences with a lot more certainty behind them. So when that happens, basically, if we see that price starts moving lower and breaking below prior candles, like it does here, you can see when it put in this high here, this is the candle that broke above this high. When this happened, we don't know whether this will continue higher or lower. But when the very next candle starts breaking below lows of prior candles, like here, this prior candle low, or this one right here, when it starts to do that, then we have our confirmation signal that this is potentially a divergence to the downside. A divergence that signals to us that this uptrend is weakening and a new downtrend could possibly start at that point. And that is basically our signal to go short. When we break below this candle here, this one, the one that broke above the previous high, this is the one. When we break below it, this can be your signal to go short and enter your stop just above the highs. So this would be your entry here. Stop goes just above the highs. And again, we are targeting a prior dynamic profit level. Not the one that is very close to the price, but the very next one. Or you can also scale out here something and then take out everything at the very next level that is a good distance away. That's basically what we're doing here. And you can find these divergences often on your chart. As I said before, they're not that common, and that's by design. We don't want to see every little swing high and low that is not very significant. We want to see the big ones, the ones that can really signal a big move either to the upside or the downside, and then you can enter. That's basically your confirmation to enter. Another really good reason why that works is because not only do we have divergence, which means weakening of the uptrend, but also we have people that are placing their stop losses just above prior highs. Those people are getting stopped out. Market makers can use those orders to get liquidity and move prices lower. So you will often see this type of behavior happening at tops and bottoms of moves. You will see one price, one level getting broken through, and then a immediate move to the downside. That's because there are a lot of stop loss orders just above those highs that are getting triggered, and then we're seeing a move to the downside. So that's basically a whole other area that I don't have the time to go into right now. Maybe in a future video we can discuss about that. But that's basically another reason why these moves can be so reliable and so powerful when you observe them. Okay, so that's one divergence to the downside. Let's have a look at a divergence that happens to the upside. So basically a divergence of the ATS when it's red, looking for a move to the upside. Let's have a look at something like this. So let's have a look at Tesla. This is a 1 hour chart. I'm showing you different time frames because this technique, just like the ATS, works on all markets and all time frames. So before we had a look at Nasdaq futures on the 15-minute chart. This is Tesla stock on the hourly chart. Let's see. Can you spot the divergence here to the upside? If you want, you can pause the video, take your time, and observe whether you're seeing it or not. If not, no problem. We will go through it together. So basically, what happened in Tesla, it is perhaps not as obvious as in the other chart, but when you zoom in, you can really see it. You can see that price has put in a lower low here. This is a low, and this is a lower low than this one, right? From here to here, you can clearly see that. But that does not translate into the ATS. So the momentum of this down move is not there. There is no momentum behind this move to the downside. You can see it very clearly here. So even though price did make a lower low, the ATS did not. It made a higher low here, or you could also see it as this staying mostly flat, but at least it did not make a higher low. It made a slightly higher low here. So the momentum behind this downtrend is significantly weakening at that point. When this happens, again, that is your confirmation to go long to the upside. You could wait for an official ATS buy signal, and you are getting that a little bit later at this location here. When the bars of the ATS change from red to blue, that's your signal to go long and buy at that point. But you can also get in before that happens, right here, as price is breaking above the candle that created this divergence basically, which is this candle right here. So your entry can very well go just above this candle here, this red candle here, and your stop loss can go just above the lows. So your entry, your trade will look something like this. When this candle breaks above this one, the one that created the divergence, you can enter long here, place your stop just below the prior swing low, and there off you go from that point on. So you're getting a much better location than the official ATS signal that would have gotten you in on that trade right here. Still a profitable trade, but with the divergence, you're getting a much much more profit out of this trade than you normally would. And you're basically targeting the dynamic profit levels. Again, just like taught in the strategies in the course, you are scaling out as you're hitting different dynamic profit levels. So you're taking something off at this point at the 3-to-1 risk reward ratio, and then your next location to scale out is the next dynamic profit level, just as price hits the next dynamic profit level at the 1-to-10 risk reward ratio. So at that point, you're risking $1 to make 10, which is obviously a no-brainer at that point. So that's basically divergence, both in the downside and to the upside. It's a very powerful tool to have in your trading arsenal. I've been using it more and more over the years because I do see that the ATS works just so well at identifying these divergences, simply because of for the reason that they're not that common. They're not that common. When they occur, they are there for a reason. So that when you see them happening on your chart, you can trust those and take those trades potentially for a good risk-reward ratio. Of course, always adhering to your risk tolerance, always setting up your stop loss, calculating your risk, never risking more than 1 to 2% of your account, all of that exactly as taught in the course. So I hope this video was helpful. Let me know if you want to see more examples of divergences or any other aspect of the ATS, and I can make some more videos showing different aspects of the system. So yeah, thanks for watching, and as always, take care.